The governor of the Central Bank of Nigeria, Godwin Emefiele, is urging against panic in the wake of a government directive that state departments and government ministries all move their accounts to the central bank and out of commercial banks altogether. Now, the move has the potential to drain billions of dollars from the financial system, but the governor says he's ready to inject liquidity if needed into the interbank market. Now, the policy aims to provide a lot more transparency over government revenues and is part of President Muhammadu Buhari's efforts to fight corruption. Interbank lending rates spiked to 200% at one point this week, but Emefiele has denied that the policy had provoked that liquidity crisis. The Central Bank of Nigeria has also ruled out devaluing the naira even further. The currency, of course, has fallen sharply due to declining oil prices and revenue. Let's head over live to Lagos. Deji Badmus has been following developments in the capital markets in that country. He joins us now live with more data on this story. Deji, the governor is arguing that the move to a Treasury single account will only move roughly $5 billion worth of deposits. But analysts in Nigeria clearly disagree. What's the most accurate figure that could be affected by the move of public sector deposits out of commercial banks?
Well, Rama, we do not know. I cannot confidently tell you the accurate figure. What we have coming from the central bank, as you said, $5 billion. But analysts are saying, look, at the end of the day, this whole thing is going to come up to about $10 billion. That's what they're looking at. But one thing we do know for sure is that it's caused some kind of liquidity problems now for the banking industry in this country. Good thing, the central bank governor has said they are ready to inject liquidity into the system if they discovered there was a problem like that. They're going to have the Monetary Policy Committee meeting next week, and so we're going to wait to find out what how they're going to inject liquidity into the system. What we know is that analysts are saying, look, there's every need for some kind of injection of liquidity, and some people have suggested there is a need to reduce the cash reserve ratio from 31% that it is now to somewhere around 20% to 15%. We do not know if that's going to happen. Some have suggested, look, what you just need is you don't need to reduce the cash reserve ratio, that what you need to do is just to remunerate a part of that cash reserve ratio, and that the banking industry would not have the kind of liquidity problems they are facing now. But we'll have to wait and see. Next week, they're going to have that Monetary Policy Committee meeting, and we'll wait and see what the CBN does, Rama.
Indeed, I'm glad you brought up the MPC meeting, because some members of that committee disagree with the decision to keep the naira artificially at around 200 naira to the dollar. But is that sentiment widely shared among bankers and other analysts within the financial system?
You're absolutely correct. I mean, the general impression here, especially among analysts, is that, look, there's every need to devalue the naira further. The CBN, as you know, has come out to say it is not going to devalue the naira. President Buhari has also reaffirmed that there will be no more devaluation. But some analysts just think, look, at 200 or at 199 point something now, that's the official exchange rate, that the naira is not appropriately priced, that there's every need to devalue the naira further, and not just devalue the naira, but to open the foreign exchange market and prevent of intervention you have now that the central bank is, at the moment the central bank actually intervenes just to stabilize the naira. So that has been the argument among analysts, but then the CBN standing its ground that there will be no further devaluation. And somehow it would appear the CBN is on strong footing, because, with its intervention, we've seen some kind of stability in the foreign exchange market, especially at the interbank level. But of course, you cannot say that at the parallel market level, Rama.
Indeed, certainly. Of course, that has come at the cost of depleting its foreign currency reserves. One last question for you, Deji. The CBN has repeatedly said it will meet legitimate foreign currency needs for goods other than the 41 that it has blacklisted. But just how efficient is that in practice? How many days does it take between a company going to the CBN saying we want money for XYZ and actually getting those funds?
I can confidently tell you that it's not as efficient as the central bank would want to make us believe. I have actually spoken to a couple of local manufacturers here who actually need foreign exchange for to carry out their businesses, and they say, look, it's not efficient in any way at all. For instance, the rule requires that you apply 48 hours before before your request. You apply 48 hours before you actually get it. Now, you apply 48 hours before, but most of the manufacturers I've spoken to here say, look, despite that 48-hour application, you can apply and not get the money. It can, as a matter of fact, take weeks before you're able to get your foreign exchange. And that in some cases, they do not get it at all. And that it tells on their own finances, because for most of them who you're supposed to apply, fund your account 48 hours before the time. For most of them now who apply, they actually borrow money to fund their account, and they pay interest on this money they borrow. So they fund their account 48 hours before the time, and several weeks they don't get the money, and they are expected to pay interest on that money they have actually used to fund their account. So it's not as efficient as the central bank would want to make us believe. That's what the manufacturers are saying, and you know, they're just saying there's every need to change the system.
Indeed. We'll leave it there for the time being. Thank you for the update. That's Deji Badmus live in Lagos.